Hi, this is Scott Martindale with Sabrient Systems with this week's Sectorcast. Well, the Dow Jones U.S. Transportation Index has been extremely impressive this year, and it's running interference for the broader market and trying to prod the bulls ahead as the S&P 500 deals with its all-time highs, which is proving to be formidable resistance, particularly given the activities in Cyprus and Italy and the EU, making investors a bit skittish. And of course, this is a holiday shortened week, so trading volume is a little bit lower. Perhaps next week will be the breakout opportunity, although it could happen anytime. Transports have often foreshadowed stronger gains ahead for the blue chips, so bulls have been eager to add new recruits to their ranks. Every minor pullback appears to be a buying opportunity these days. By the way, the top performing transportation stock has been Alaska Air Group, which happens to be one of the 13 stocks in Sabrient's annual Baker's Dozen portfolio for 2013. If you haven't checked it out, you should go to our website and do that. As we close the first quarter of the year and look at the 10 U.S. sector iShares that I track, it's the defensive sectors like healthcare and consumer goods that have been the performance leaders on a year-to-date basis, with returns in that 13 to 15% range. And then the next group close behind has been financials, consumer services, energy, utilities, and industrial, and they're all kind of bunched together right around 11% year-to-date returns. And then at the bottom three have been telecom, basic materials, and technology. And technology has actually been something of a surprise, particularly given the bullish market we've seen. But its underperformance has given it a low relative valuation that's kept its fundamentals-based Sabrient outlook score very high, and that's why it remains at the top of our rankings again this week. Investors seem nervous about tech names lately, and of course the prime culprit has been Apple. Apple not only has a huge weighting within the IYW ETF, but also it's had a poor year-to-date return of like 15%, I think, down. So that's really been a drag on the tech sector and tech investors' psyche as well. Looking at the S&P 500 Spider Trust, the SPY that I like to look at its chart every week. It earlier fell out of its bullish rising channel, and it's been unable to break back in, but it's still rising. Although for the past couple of weeks, it's been within a sideways channel. And it's Thursday, it looks like it's trying to break through that. Oscillators like the Relative Strength Index, MACD, and Slow Stochastic have all been neutral during this technical consolidation right below those all-time highs. So it's just been tough resistance, but I'm confident it'll break through. The other thing I want to mention is the VIX has been incredibly low during this, given all the global uncertainties. It's amazing how low the VIX has been, staying well below 15. And safe haven gold has been moribund. So we see equity valuations are reasonable, with a risk premium still very high for equities, and the market's at new highs, and we get a lot of market commentators who are calling this a market top. So, you know, from a contrarian basis, that's a good thing, and everything really points to more upside, I think. Looking at Sabrient's fundamentals-based Sectorcast ETF rankings of the 10 U.S. sector iShares, overall, it seems that this week's rankings are more neutral. Consumer goods, healthcare, and utilities all rank in the top 5, and they all have scores above 50, while industrial, energy, materials, and consumer services, which usually are associated with more economically sensitive sectors, they're all in the bottom half and scoring well below 50. Technology continues at the top. It's got a robust outlook score of 90, strong across the board, all factors, low forward PE, solid support from Wall Street analysts, strong projected long-term growth, and the best return ratios. Defensive sector, consumer goods, the IYK is now in second with a 76 after an impressive 38-point jump, primarily due to a rash of earnings upgrades from Wall Street. Financial falls to third as fewer analysts saw fit to upgrade earnings heading into earnings season, which is starting shortly. Telecom stays in the cellar with a rock bottom outlook score of 0. It just is, it's low in all of our factors. The bottom two includes consumer services this week, and the forward valuation is the main culprit that's been plaguing stocks within the IYC. Top-ranked stocks within technology and consumer goods this week include F5 Networks, CACI International, Energizer Holdings, and Whirlpool Corp. Thanks for listening.